We've got to start over, everybody. I apologize for the delay. Apparently, Citadel shorted my string.
Gonna be so goddamn rich.
I think it's time to blow this scene. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
Yellen,
you?
give me the fucking money. Get the goddamn money printer out.
Great. The bounty hunter.
We're gonna be so fucking rich. Get the goddamn money printer out.
All right, welcome back to BossBlunts Think Tank, where the hedge funds keep trying to take us down, but we keep popping back up. Apparently, you can't mention, you know, the seasickness or mRNA, you know, because that ends up getting your stream taken down without even getting fucking started. So yeah, now that we're back, let's take a quick look here. mRNA is down 54.6% year to date, as we were saying just moments ago before we were so rudely interrupted by Ken Griffin and company, most likely. But taking a look at the sector, the NASDAQ is just absolutely getting wrecked. Zoom video communications down 57%. We can even take a look at the Nifty 100 in India. Motherson Sumi Systems down 50% year to date. Adani Transmission 35.6%. Sounds interesting. This is in the negative here, but for some reason it's showing a positive. I'm not sure what's going on with that. That's really interesting to know. I wonder if it's squeezed. Yeah, a 1 day lag on these as well. Anyways, let's move on. Basically, Coinbase is already telling us that the beginnings of what Janet Yellen told us would happen are beginning to happen. Stablecoins are vulnerable to financial runs. Do you understand? Yellen says run on UST stablecoin illustrates crypto's risk to financial stability. Now she's citing the DPEG of Terra USD, which is UST, that's the ticker. And we've heard old Yeller in the past give us evidence that there is a potential threat to financial stability. In September of 2021, Janet Yellen was in Congress and warned us all about this. It's all over YouTube. We've shown it on this channel, actually, multiple times. That being said, I'll show it to you one more time, just in case you've never seen it. This is Janet Yellen in front of Congress during the CARES Act, in which she told, I know exactly where it's at too. She tells us everything we need to hear.
To know the details of
Listen to
right.
this pitch.
Yeah.
We'll certainly work
I want to
with
raise
you
your
on that.
attention. So
Absolutely.
thank you, Secretary Yellen.
We will definitely do so.
Much appreciated. Turning now to the topic of energy, Secretary Yellen, I'd like to get your thoughts on what's happening in Europe right now. Lead us to this.
I believe there are storage technologies that can be deployed and
Trust in the Fed. Presence of Fed regional banks, you began a review of the ethics and transparency rules across the Fed because, and I quote, the trust of the American people is essential for the Federal Reserve to effectively carry out our important mission. The Fed Board of Governors is subject to Foia and the Federal Records Act, but the Fed regional banks currently are not. Would you support making Fed regional banks subject to Foia and the Federal Records Act to ensure greater public transparency and trust in the Fed?
Senator, that's a good question. I'd like the chance to think about it and come back to you. I would want to reflect
No
on
answer.
that and on the reasons why they're not subject to it, and I will do that.
I appreciate that, Chairman Powell. If there's something in Mr. Chairman, I'll wrap up here the statement. If there's something that concerns, I think, many of us is the
Jerome Powell cannot tell you why Freedom of Information Act requests shouldn't pertain to the Fed.
loss
He
of
cannot
trust
tell
in the
you
American
because they've got no good answer. He had to think about it. It should be a really simple answer.
people in their government. And here you have one more example.
I think there are threats to financial
Listen.
stability that have come from the growth of activity in the shadow banking sector. We saw some of those threats emerge during the onset of the pandemic. We have
Financial runs. Stocks like AMC and GameStop during the onset of the pandemic, January 28th, 2021 through February 16th, 2021.
for example, open-end bond funds that guarantee daily redemption, saw massive withdrawals by individuals who wanted to flee to cash, and that can trigger fire sales of assets with systemic consequences. The Financial Stability Oversight Council that I head has taken that up as a topic that we're looking at and examining. There are issues relating to hedge funds and the possibility of leverage there that can trigger financial runs. That's another topic. And more broadly, climate change over time is, I believe, could be a significant risk to the financial sector and the economy. And IFSOC is also doing work on that to assess, evaluate, coordinate regulators, work with them.
Stablecoins and over-leveraging by hedge funds. According to Janet Yellen, as testified before Congress during the CARES Act on September 28th of 2021, have the potential to lead to financial runs. We bring that up because this chart is 2007, and this chart up on top, this is 2007 that you're seeing, the lines up on top. And right beneath that, you're seeing 2022 sped up 500 times. The 2007 chart for a period of a year, 504 pixels was equivalent of 383 days. For the period of about a year, or about 2 years, let me start over here. What you're looking at here is 2007 on the top. What you're looking at on the bottom is the Volkswagen squeeze in orange. What you're looking at here on the center line, which is basically the bottom chart, the bottom chart that you're looking at here, is today. It's a period of 57 days. Okay, but on the top, it's a period of 383 days. They look exactly the fucking same for the most part. There are very, very minor differences, but when you can see pretty much on all the humps, all the drops, all the jumps, all the spikes, they're pretty much in there, except accelerated. What we saw in 2007 is much of the same that we're seeing now, magnified. There's a better view. And everything is magnified and multiplied and sped up because the algorithmic trading by these guys has gotten faster, the high frequency trading. They've gotten better at it, and they've had to increase this rhythm. That's why the charts seem to repeat themselves. The fractal theory of these, where they look similar, makes sense, but the chart doesn't dictate the outcome. The outcome is dictated by outside events, external events, manipulation, and a myriad of other factors. So one would assume that the chart would look different, except the difference we have here is 2007 we saw the market bullish and then all of a sudden turn bearish as it crashed and Volkswagen squoze to about $1,000 a share. And now you've got 2022 on this one superimposed beneath it that is showing almost the same movements at a 5 times increase of speed. This is happening, in my opinion, because of the over-leveraging by these funds. So what previously allowed manipulation to occur for a period of over a year, 383 days, that time period is now playing out in a period of under 90 days. We're currently at about 57 days here on the chart here for 2022, and it looks the same as a 1 year period for 2007 during the market crash. From the looks of it, we're getting awfully close to an actual market crash just based off the charts alone, pretending I didn't know anything else about it. That's just my estimates, and I'm not a financial advisor. That's just what I'm seeing off this chart. I think many other people would probably agree. You guys hear me in the Discord?
Oh, yeah, you're good, brother.
Thanks. Appreciate you.
Yeah, man.
Yellen cites UST breakdown while calling for stablecoin rules. Holy shit. Thank you, Vajos. We appreciate you, brother. I think that's exactly what Janet Yellen's telling us. She points to risks of financial instability and is saying that, a stablecoin known as Terra USD experienced a run and had declined in value, she said. I think that simply illustrates that this is a rapidly growing product and that there are risks to financial stability and we need a framework that's appropriate. Government regulation is coming for your cryptocurrencies and stablecoins. Without a doubt. Her response was to a question by the one and only crooked Senator Pat Toomey, who just so happened to sell GameStop at its top price on January 28th, 2021, the moment the market opened, about 4 minutes before the price decreased from its all-time highs. Coincidence? or insider trading. I can't say for sure. But I do know that the top Republican on the banking committee, Toomey, felt urgency to pass a regulatory framework for the stablecoin. And Yellen said it would be highly appropriate to aim for passing a legislation this year. What does that mean? They're probably going to shove what? They're going to shove the central bank digital currency down your throat after the stock market crashes, after the meme stop squeeze, and after hyperinflation is out of control, because the Fed will have to print out fuckloads of money to bail out all of these banks, prime brokers, market makers, hedge funds, family offices, and so on, credit unions, you name it. The entire financial system will collapse if they don't bail out at least some of these too big to fail banks. At the same time, crypto is going to see massive, massive financial runs. You've seen things already. Luna was down 83%. What was it, 84% in one day, guys? Is that right? You know what? That's not even the right one here. Here it is. This is the article that I was looking for. Down 52.43% today alone, down to 49 cents. Terra is supposed to be $1. $1. At one point, it was down over 80%. Check this out. It's highly possible that prime brokers and hedge funds, allegedly, like Citadel, BlackRock, JP Morgan, borrowed 100,000 Bitcoin from Gemini, the former founders of Facebook. Not Zuckerberg, but the other two rich guys. That 100,000 worth of Bitcoin that 100,000 Bitcoin that was borrowed from Gemini was swapped into UST. Okay, this is also known as Luna or Terra USD, and the deal was offered by these prime brokers and hedge fund to Do Kwon. He is one of the founders of Terra, in exchange for Bitcoin. I greatly believe that a deal to exchange Bitcoin for this UST, this stable coin that is pegged to the US dollar, was traded via dark pools between Do Kwon and these perpetrators here. And Do Kwon was basically caught like a fish on a hook, line and sinker. He thought he was receiving a great deal for his stable coin, Bitcoin on discount, in exchange for some liquidity. But he didn't expect that those banks and hedge funds that have previously loaded up on that UST before they offered him the deal, all of a sudden decided to start selling it because they took the other side of the trade and shorted it before they started selling off their position. So after shorting it and massively selling off their position, it started a cascading effect of losses and stop loss hunting that began and crashed Terra's value about 80-something% today, and it ended the day around down 58% almost. If the value of Terra USD falls below $1, traders can buy Terra USD for less than $1, turn around and sell those tokens for $1 worth of Luna. If the price of Terra rises above $1, the algorithm will increase its supply until the price falls back to $1. Yellen told us that this illustrates this is a rapidly growing product. There are risks to financial stability. Bitcoin is trading at 28,450. You haven't heard us come on and talk about Bitcoin's price for 5 days since our last video. We haven't mentioned Bitcoin because as long as this was over 30,000, Bitcoin was safe. But let me ask before I go any further, Edward, Cash, what do you guys think's going on with Bitcoin next?
Cashier can go first.
Nothing good right now. It's going down.
I mean,
right?
I've stated it many times before, and whether people now finally believe it or not, but I've been saying that back when Griffin said it, they were, oh, we don't trade crypto. We don't. I pointed how they have an offshore crypto market, the OT, how they're using it. In my allegedly opinion, allegedly they're using it as the hedging liquidity tool.
I think
Because,
you're right.
for example, for Doge and other places, the things these are not driven by people. These are not by people, by me, retail
Right.
investors or people who
institutionally
are in
driven,
the.
not by retail.
Yeah, it's fully institutional. It's a order book, it's a book leverage of how they're managed portfolio, and if they need liquidity, obviously they'll pull it out. I've been saying it's a liquidity tool for a very long time, and when things go crazy wrong, this is what happens. It's like who are the top market makers? Virtue and Citadel.
Exactly.
That's what we know of, and then below that, I forgot their names, but there's also below that. So when you look at who are the drivers of the markets, well, this is pretty obvious. They're connected to so many, like they're connected globally with
Exactly.
European
BlackRock,
markets, Asian markets.
Citadel, all these guys, right? JP Morgan,
Yeah.
all these is the players, all these market makers, these hedge funds, they're connected at the hip, basically. That's why
Yep.
Melvin Capital was bailed out by Ken Griffin and Stephen Cohen at point 72 and Citadel, respectively. It had to happen to keep the rest of the market from tanking right along with it. And we saw that Terra USD and Luna announced Monday that it would lend out Bitcoin from its reserves to traders so that they could buy Terra USD and prop up its price. Do Kwon explained the move in a series of tweets that's about 18 tweets long, but I'm not really going to explain the whole thing. But let's just say this. Buy UST if the price is overpeg. Buy Bitcoin if the price is overpeg. So significantly strengthened liquidity around the peg there. However, the thing that happened was a massive attack against this company by the players that run the markets, BlackRock, Citadel, etc. Allegedly, I don't have any physical proof of it, but that's what is going on. And even Do Kwon has told us an idea of what's going on and has stated that he's going to get the company back on track. That's really tough to promise when your company has lost half of its fucking value. Now let's take a look at Luna. Terra USD, also known as UST, is an algorithmic stablecoin which strives to maintain a one-to-one peg against the US dollar through an algorithm that controls the supply of an associated crypto called Luna USD. Down 60% on the day. That's rough. That's extremely rough. So this basically led to a huge sell-off, breaking that $1 peg for the USD and the USDT. What you've got in that realm is pretty much a domino effect. And let's see if I can show this to you in a little bit more. Okay, how can I explain to you the way that stablecoins could domino? Take a look at U.S. equity funds, reduction of inflows of money going into the market. In January, U.S. mutual funds and ETFs saw just $9 billion in fund inflows, the lowest level since March of 2020. There's a large of lack of liquidity when crypto and other market, when these players lose money, there's a large lack of liquidity. I'm sorry, I'm trying to do too many things at once. Okay, and when there's only $9 billion of fund inflows in U.S. equities, it goes to show the weakness of the American retailer, their 401k, their savings plans, as well as the weakness in the liquidity that is owned by the largest players in the market, especially since in January of 2022, we were still receiving 100% quantitative easing, full tilt from the Fed. The cocaine operation, 110%, was in effect by Jerome Powell. And even still, we had one of the worst months since March of 2020, just a couple months ago in January of 2022. And just like we've covered on this channel, the entire month of January, that was the stock market just starting to show its true colors. Really, really, truly. Look at growth funds down. Large cap growth funds are down $6 billion net flow from February. 1.2 billion in mid cap, 1.1 billion in small. Blended, 38 billion in a blend. So people are moving their money into a large cap blend instead of large growth stocks, and value stocks, you can see, are also moving in. Investors are bracing for several interest rate hikes. They understand that stable coins, crypto, equities, treasury, bonds in general, real estate is all kind of losing steam at the same time, right along with the global economy and supply chain. I own a logistics company. I deal with shipping and transportation every day. Since the first week of March 2022, I can assure you that while we're keeping somewhat busy, a lot of truckers and a lot of carriers in the United States and Canada are extremely slow. Others, like drayage carriers, are hit or miss. Some are very busy in certain areas, certain ports, and certain rail yards are completely empty, for the most part, with a ton of empty chassis sitting around. Why is this happening? Because supply chain imbalances. The ports are slammed, so the coastal cities are moving very slowly. And then the rail yards and the rest of the country are in a very tight situation where there's no real volume of drayage being moved from ports to inland rails to be, transloaded or offloaded for import. And what is coming in is trickling in, and a lot of stuff is being moved via airlines. I've noticed a little bit of an increase in air freight, but a large reduction in air freight from China, mainland China. Being that my company is based out of the greater Chicagoland area, we deal with O'Hare Airport, one of the world's busiest air freight airports. And there are definitely a lot less trucks. There are definitely a lot less shipments being moved in and out of that airport that are coming from China every day. And it shows me and everyone else in the shipping industry that while certain sectors remain strong, the vast majority of supply chain, both domestically and internationally, is in very bad shape. And that's why I recommend everybody has their own garden, and as well as food stores and supplies, and as much tangible assets on hand as possible. Large growth, January 22, net inflow, negative $23 billion. Crazy. U.S. consumer debt is approaching $16 trillion. Meanwhile, stable coins are not able to maintain their peg to the U.S. dollar. And the Russian ruble is higher compared to the dollar than it was since before the war in Ukraine began. United States consumer debt approaches $16 trillion. It is at an all-time high as of the fourth quarter of 2021. This represented the largest quarterly rate of increase since 2007. As of this writing, mortgages were still increasing in Q4 of 2021, reaching a new high of $11.3 trillion in housing debt. At the time, the quality was strong, with subprime borrowers representing 2% of the total, opposed to 12% of the total from 2003 to 2007. However, today we don't have any issues really with American mortgage-backed securities. The real problem is with commercial mortgage-backed securities. So anybody that believes that the real estate market is strong for now is likely to be somewhat correct, but it won't be for long, because real estate developers, to the tune of tens of trillions of dollars in China, are going to go bankrupt, and a lot of commercial mortgage-backed securities are going to default, sending credit default swaps through the roof. That's why the purchases of Russian and Ukrainian, as well as many other credit default swaps globally, is increasing hundreds of percentage points in price over the last several months. Let's just say last 4 months. As of May 11th, some of Sunac China's bondholders had not received coupon payments from the property developer on a $750 million offshore bond. They can't even pay a $750 million bond. They've got billions upon tens of billions, just this one company. And there are hundreds of Chinese developers like this. And your bank owns these developers. Your pensions, 401ks, IRAs, and TSPs, if they're invested in their bank or with your money manager and you're not managing it yourself, you own emerging markets ETFs. And emerging markets ETFs are garbage, because it's going to be the first set of dominoes to collapse. Actually, it'll probably be stable coins here, followed by mortgage-backed securities and a short squeeze on credit default swaps, followed by a collapse in the stock market, or vice versa, and followed by a short squeeze in meme stocks, which would probably end up in a short squeeze of precious metals like silver and palladium and gold in the near future after that as well. The implications of what's happening today are insane. And when you got this old bat consistently telling you that over-leveraging by hedge funds is going to lead to financial runs, and one of the greatest risk factors to financial instability is stablecoins and the vast $20 trillion at risk. Let me pull up this this graphic so I can show it to you guys. It's freaking unbelievable. And it makes me realize that if you're properly hedged, we're going to be so fucking rich. Holy shit. Because last time that these stocks got halted, oh, sorry, that's the wrong one. AMC purchases for $160 a share were getting canceled because people couldn't get their hands on it for that price. And shares of GameStop were being sold, fractional shares, for $5,124.50 a share at January 28th at 9:34 in the morning. Meanwhile, you've got the Federal Reserve and Janet Yellen and Gary Gensler and the plunge protection team propping up our stock market every single fucking day almost over here. Check out this drop from 457 down to 454 in a heartbeat. And then the naked shorts on the VIX caused this positive buying pressure volume candle. It is proven by the increase in the failures to deliver going to almost an all-time high for the last 52 weeks for the U.S. Treasury, because the U.S. Treasury failed to deliver on their naked shorts on the volatility index that they did in order to cause a gamma ramp on this S&P 500. I know it sounds like gibberish if you don't know what the fuck I'm saying. I apologize if that's the case. Maybe replay it a couple times. If you don't understand what's happening by the end of this video, maybe go play with fucking Legos. I'm not sure what to say. Or get somebody that can help you. Because I can't tell you what to do. I can't tell you how to spend your money, and I will not. But I think it's important that people know that at the same time that all these things are happening, that TSP, thrift savings plans for all federal employees, such as United States Postal Service workers, military personnel, Army, Navy, Marines, Coast Guard, Air Force, everything in between, you name it. A lot of these people, proven to us, have no idea that this is coming and that they will be unable to access their accounts from May 26th, 2022 at noon Eastern Time through the first week of June 2022. However, all invested funds will continue to reflect market changes during that time period. I'm also aware that BBIG is issuing a stock dividend on the 27th of May. That means shorts are going to have to cover on the 27th of May for BBIG, in my opinion, on or about, per my knowledge. As well as we've also got a situation where MMAT and MMTLP are supposed to be issuing a dividend any moment now. And then we've also got GameStop that on January 2nd, 2022, GameStop is going to be voting on issuing a stock dividend. On June 3rd, 2022, we've got an executive order coming out from President Biden. The President of the United States says that we're going to be fucking rich by executive order. However, this was started by none other than Donald J. Trump on November 12th, 2020. That fucking bloody legend, and I will say that about him right now because he gave us the blessing of this executive order 13959, addressing the threat from securities investments that finance the CCP, military companies. And that caused a shitload of Chinese military companies, about 35 of them, to become worthless collateral as of 9:30 a.m. Eastern Time on January 28th. Granted, that order was extended, but by then it was too late, and Deep Fucking Value was on the news in front of Congress testifying on January 27th that he loves the stock and that he would buy more GameStop, and that caused more further fear of missing out buying by retail, which caused further gamma squeezing, fear of missing out, delta hedging by the market makers, and fear of missing out by the retailers, which equals gamma squeezing for all parties involved. And that's why they had to go position close only. They had to go position close only because it is the most significant systemic risk to financial markets. As of the second quarter of 2021, a measure of aggregate liabilities that were vulnerable to runs increased 3.6% year over year to $18.2 trillion. That was in the second quarter of 2021. Can you imagine what the fuck it's at now? Over 20 trillion? That level was equivalent to 80% of the United States nominal gross domestic product. Banks relied only modestly on short-term wholesale funding and maintained large amounts of high-quality liquid assets. Some types of money market funds, as well as other cash management vehicles, remain vulnerable to runs. Cash management vehicles like what? Emerging markets ETFs, thrift savings plans, 401ks, IRAs, ISAs, you name it. And bond mutual funds continue to grow rapidly and remain exposed to risks due to their large holding of liquid assets. If you've been watching the bond market, you'd know that it's down about 50% already. This obviously is screenshots from a while back. And they also, Janet Yellen, old fucking Yeller, also told us that stablecoins can suffer from structural vulnerabilities due to low funding risks at domestic banks. But structural vulnerabilities persist at many types of money market funds, open-end mutual funds, and stablecoins. Emerging market funds owned by companies like Alliance, Ashmore, BlackRock, HSBC, UBS, Vanguard, you name it. They own these Chinese Evergrande junk bonds. At the same time, BlackRock owns 40 million shares of AMC. We're not even getting into AMC and GameStop and other things like that. They're fucking collapsing. These are Chinese property developers. This is one day of screenshots, and I only grabbed a couple. This is just the main top layer. The bloody fucking legend, Donald J. Trump, as much as I disliked him while he was in office, I got to give him credit now, that January 28th caused a huge run-up, and then it was extended through May 27th, 2021 by President Biden. I'm not too happy with him for extending it because he gave hedge funds and banks a way out by extending that and pretending to be good friends with China. Not China. So, President Biden amended using Executive Order 13974, amended and superseded the 13959 on January 13th, 2021, which extended this collateral through 9:30 a.m. May 27th, 2021. A few days later, Sleepy Joe gave us this, Executive Order 14032. Once again, giving hedge fucks a way out. Giving banks, scumbags like JP Morgan and Lehman Brothers. Oh, I meant to say, Bank of America and Wells Fargo and Solomon Brothers. Oh, I meant to say Citibank, not Solomon Brothers, the one that owned 9/11, that the building that wasn't actually destroyed by an airplane, more so exploded. Or imploded, I should say. But you can look into that on your own. I do recommend Zeitgeist. If you don't know what I'm talking about, you need to go on Google or YouTube and watch Zeitgeist, the documentary. Executive Order 14032 on June the 3rd of 2021 superseded in part EO 13959 and EO 13974. And what that did was it extended it 365 days, amending that order and hereby replacing and superseding it in its entirety as follows, adding some companies, as well as making that effective through June the 3rd, 2022, 12:01 a.m. Eastern Daylight Time. And I do know that on February 16th, the Federal Register was hit with another 40 more companies by the United States Treasury and old fucking Yeller herself, adding an additional 40 more Chinese companies to this forbidden collateral that is going to be causing things like this, like it did then. AMC was up 2,233% on June 2nd, and on June 3rd, Biden gave them a lifeline. He gave Citadel and Ken Griffin a lifeline of 365 days to get their shit together. And that hasn't happened. And now Russia's at war with Ukraine. China's helping out Russia and doing trade. International trade is happening and diversifying away from the United States dollar. China is making moves on Taiwan and sending in larger and larger cavalcades of bombers and just jet fighters and various kinds of aircraft over Taiwan to antagonize and probably test out their response times. That is one of the reasons why I don't believe that Biden would continue to extend the executive order. Is it possible? Yes. Yes, it is. But why would they line everything else up For example, the thrift savings plan. How does this help them? If millions of people in the military,
what a coincidence.
right? How many people are in the military? How many people are work for the post office? How many people are federal employees? And if millions of them are unable to withdraw their money during a stock market crash, what does that mean? It means they're going to be left as bag holders. They're going to be left as bag holders because after the crash, those stocks aren't just going to come right back up. If you lose 80%, you're going to have to watch it. And then when it's all done and dusted, and you get your account access back on the second week of June, who gives a shit? You're going to be down 80%. It's going to take you 10 to 15, maybe 20 years to regain what you lost. Especially if we're in a bear market for the next, God, I don't even want to tell you. You're going to dislike me. People are going to think I'm some sort of pessimist, which I'm not. Well, none of us are, right, Cash? None of us here are here to hear news.
That's right.
When the stock market's being constantly propped up by the fucking Federal Reserve every day by the plunge protection team, when BlackRock owns almost all the major corporations, when China executive orders threaten to collapse the real estate markets internationally, and banks and bondholders globally that own trillions of dollars of Chinese and emerging markets real estate collateral, it's a serious problem. When the DTC is causing changes to DTC collateral haircuts, we covered this back on November 1st of 2021. We covered it a month ago in 2022. And we saw that there are changes, aside that many people didn't read. There's an appendix that the new changes basically make it so that these banks can't rehypothecate the assets of their parent bank in order to provide collateral for the shadow bank, the holding company. The new collateral haircut changes are huge fucking news. And that being said, I think we've hit a low on AMC.
Yeah, but they will go below $10.
A temporary low, right, brother?
Yeah, temporarily.
I think we've got a very good chance of AMC for a very, very brief period of time and dropping below $10. And GameStop for a very brief period of time dropping below $60. That, however, in my opinion, would probably likely signal a coming market crash and a margin call. Because due to the new DTC collateral haircut requirements, what happens when AMC goes under $10, Cash?
Only a nice haircut, 5%.
And that would increase their margin requirements, wouldn't it?
Yeah.
And as we discussed on Twitter, margin requirements for retail for AMC right now, only for shorting the stock, is 200%. And the margin requirements for GameStop for shorting the stock for retail are 300%. You could imagine what that probably is for banks that have a very large exposure to their hedge funds and to their market makers and broker dealers underneath them. We know that swaps and all sorts of total return swaps, equity total return swaps, and variety of ISDA contracts are being used and abused to short stocks and to hide short interest. Short interest is not reported because it's hidden through the use of married puts, divorced puts, synthetic shares, shorts marked as long, wash sales, and many, many other issues. Here's a list of 184 pages worth of information of Citadel fines. And any page you go to, you can see that they have willfully violated sections of the Exchange Act and rules promulgated thereunder. It is ordered that Citadel is censured and shall cease and desist from committing or causing any violations and future violations. How much did they get charged for that? $3.5 million, the cost of doing business. Let's see what this was. On December 10th, 2018, Citadel Securities excuse me one second. Citadel Securities entered into a settlement with the Securities and Exchange Commission related to deficiencies in its electronic blue sheet reporting due to an undetected coding error. You notice if you're not watching, I just did like air quotes. Undetected.
Yeah, right.
Due to an undetected coding error between November 12th through August of 2016. So for 4 years, this market maker didn't detect that they were making money hand over fist through their electronic blue sheet reporting. In connection with the settlement, Citadel Securities consented to the entry of an order finding a violation of the record-keeping and reporting requirements, yada yada, thereunder by failing to furnish promptly true and complete trading information as requested. Failure to deliver. They failed to deliver on our fucking shares. They failed to deliver on proper short interest information. They failed to deliver even the reported short interest and the hidden short interest to the fucking SEC. They fail to deliver it for years on end. I picked a random fucking page on this FINRA report. That's how shitty this fucking evidence is everywhere you look. And I've said it before and I'll say it one more time. If you're in the stock market and you don't see what's happening, go play with fucking Legos. Upon learning of its deficiencies of its execution time data, Citadel immediately suspended all submissions, undertook a comprehensive internal review, meaning we investigated ourselves and found that we've done pretty much nothing wrong, and implemented new policies and procedures. They resumed all submissions in the spring of 2018 after confirming they responded to all outstanding requests, using its new tools and corrected known issues that had caused its EBS deficiencies. All of that money that they made for 4 years and a measly fucking fine of $3.5 million and a cease and desist.
We won't have a lockdown again because of midterm.
Well, they didn't know.
I ain't locking down. They're gonna have to put me in cuffs. Anyone else feel strange?
Man, it gets better from here.
Hey man, that's the way to be. That's the way to be. You gotta stay calm in this market right now. There's so much shit going on, guys. Liz says, did you guys see Breadbox jump 50% today? They got it.
Oh, your mic is not working again?
For the soul. No, I did not. No, I didn't even know Redbox was still around.
Hey, yo, boss, we don't hear your mic.
Triple vax. Double
Yo,
vax.
boss.
Mic check. Bear with me one moment. You guys let me know if you guys can hear me over there. I know they can't hear me in the think tank. I'm just going to refresh that real quick. Let me know if you guys can hear me on YouTube, please, before I continue. All right, great. Working out. Thank you so much. Apparently, Citadel did not like me speaking about them. Citadel shorted our fucking stream just yet again, bro. Unfucking real. Let's see. User settings. Are we going to be able to actually hear it this time? Default microphone. Yeti. Let's go. All right, we got the Blue Yeti. Fantastic piece of equipment. Unfortunately, can't blame it for Discord acting a fucking fool. Can you guys hear me in the chat? Bigums, welcome to the chat, brother. Martin, Edward, Cash Money, Sigma, Zoombach, and everybody else. Thank you guys for joining us. How the fuck are you, AMC Bigums? If you're busy, no worries, man. I understand.
Good, man. How you doing?
All right, we got Bigums in the house. The #1 player in the ISDA market, in the corruption of the Fed, AMC Bigums. You saw this shit?
You live right now?
Yeah, we're live, brother.
Yep.
Let's see, look at this. This is great. What is this?
We got shorted earlier, but we're live.
Yeah, right. Citadel shorted our stream. Terra down 96.67% at 46 cents.
Oh, Bitcoin's headed down again.
Bitcoin's still trading around 28,000. It's going to continue to lose market cap. Ethereum, the last time we ran, Ethereum was around 2,000, right, bro?
Let's see.
I'm sorry, I shouldn't speak like that. The last time AMC and GameStop ran, Ethereum, I thought fell down to around 2,000.
Yeah, I mean that because last time I ran, there weren't no Bitcoins or Ethereums and shit like that.
It was stagnant. I think it dumped prior to the move, and then like AMC and G were running, because it dumped really hard on May 23rd.
Anyways,
for Ethereum.
Back on track. Look at this asshole.
Mm-hmm.
That's Heath Tarbert. He is the former head of the Commodities Futures Trading Commission. This piece of shit now works at Citadel. As of April 6, 2021, he's the chief legal officer of Citadel Securities.
Yeah, they just want to buy out every.
Heath Tarbert's bitch during his time in office at the CFTC was Rostin Beanham. And now this asshole, Rostin Beanham, is the head of the CFTC, appointed by none other than Sleepy Joe Biden on January 21st, 2021, when Heath Tarbert took a 3-month vacation before going to work to Citadel Securities. The corruption runs extremely deep. And the reason I bring this up is because the CFTC regulates the United States derivatives markets, futures, swaps, and options. Do you remember Archegos? AMC Bigums. You're the man on family offices. You got the due diligence where. What the fuck happened to Archegos? And what's to say that Citadel and all these other cats, which we've seen have shitloads of swaps on these meme stocks, what's to say they're not hiding their positions in the exact same way? And lying to their prime broker about it.
The exact same way, my friend.
We don't even have to go into detail, because if we did, you guys would probably get bored and fall asleep, because these ISDA swaps take a long time to explain. But basically, they can take out contracts with certain dates, roll them over, hide them, move things around in tranches, do things that you and I can't do, and use shitty emerging markets ETF asset collateral like Chinese bonds, using your pensions to buy them to show 100% notional value of those bonds, but they bought them at 20 cents on the dollar. Why? Because they're worthless fucking collateral, and they're going for 20 cents on the dollar. It's been proven to us in the past. BlackRock and Vanguard have trillions of dollars of this emerging market bullshit. Just some of their funds alone. For example, there's one emerging markets ETF, Core MSCI, US listed iShares, by BlackRock, has $70 billion in assets with a 36% exposure to that Chinese market. Right? One of Vanguard's ETFs has a $72 billion in assets as of January 6th of last year, with a 43% to the Chinese market. And we know that BlackRock just last month, finally started selling off some of it. They only sold off $370 million worth of that emerging markets shitty Chinese collateral. But they got billions and billions and billions of dollars of it. So what's going to happen when that collateral loses its value? Same thing last time the executive orders for January and June of 2021 took effect. Exact same fucking thing. I mean, except this time, they're not going to be able to pull the buy button. And I think the market's got to fucking crash to bring this hot mess into check. You know, the derivatives are off the chain. Okay, the quarterly reports on bank trading derivatives show us that these banks have quadrillions and quadrillions of dollars of derivatives. I didn't say billions with a B. I didn't say trillions with a T. Add another comma, add 3 more zeros. Quadrillions of derivatives.
Yeah, 1,000 trillion.
1,000 trillion. Thank you. 1,000 trillions. Think about that stack, to be honest with you. Think about how massive it is. And look at where are they putting their money? Forex. a 815% year-over-year change increase in Forex. Why would banks do this? Because Forex is one way of getting your money out of the US dollar. You know, you're moving your money from the US dollar to, for example, Japanese yen or the Chinese yuan, or into some other, you know, sort of asset out of fiat or out of Forex entirely, maybe even precious metals. The problem is that credit default swaps are rising in value, 29% year over year change in gross positive fair values. And commodities have increased 51% year over year change in derivatives contracts because the commodities prices are out of control and inflation's out of control, as we all know. The gross negative fair values are also up 36% for those same commodities and 28% respectively for credit default swaps. So it's almost a bust. The netting benefit is reducing over and over. You can see a reduction, a 21.4% reduction in benefit of NCCE, which peaked at 804 billion at the end of 08. That's net current credit exposure. Okay, this is basically bilateral netting. It's trading contracts from one bank to another in order to try to offset their values and offset their cost potential losses in order to wash out the money at the end of the day so that nobody owes each other money. And the ability for them to use this net current credit exposure reduction benefit, the benefit of these has decreased 21% year over year because these derivatives are toxic. They're fucking toxic.
Yeah, high frequency arbitrage.
On that note, I could delve deeper into the subject, but I will probably lose some people. So I just want to say, before anything, I want to say thank you, everybody, for your support. Vajos, Grandpa Barney, thank you guys. Appreciate all of your support. Grandpa Barney says, here you go, boss. Add to the fund. Much love. Stephen Vincent, thanks for bringing us together and feeling us the DD boss. Thank you very much for your support of the think tank, and we really appreciate you. Bajo says, we're going to be so fucking rich by cash featuring BossBlunts. Dude, that's fucking absolutely right, my man. I am but a mouthpiece. Ken Griffin has entered the chat. Thank you, Just Gaming. Appreciate you. And the God Pill. Let's eat rich. It's dinner time. Yeah, dude. It's time to eat. We're going to eat like fucking king soon. At any moment. The bulk of NCCE in the financial system is concentrated in banks and securities firms to the tune of almost 38%. And in corporations and other counterparties, 52%. The combined exposure to hedge funds and sovereign governments was small, about 9% in total. That doesn't include family offices, though, does it? Because family offices don't count as hedge funds. Ain't that right, Bigums?
Oh, you did. Yeah,
it is. Robbie Calkins says all short sellers are are fuckers, if you know what that is. Yeah, it's for fucking, and we gonna fuck them. Ken Griffin, pay me my fucking money.
Hey, did you want to go over the Bernie?
Oh, man, you guys want to talk about crooks? We can talk about Bernie Madoff, because Grandpa Barney says, I don't want smoke blowing up my ass. Like it or not, Grandpa wants the truth. I like that. I like that. You know, speaking of that, let's see centrally cleared derivatives. What percentage of these derivatives are centrally cleared? You see how low those numbers are? Less than 40% of derivatives on the fourth quarter of 2021 were centrally cleared. That means you traded on lit markets, lit exchanges. So 60%, over 60% of all interest rate swaps, fiat and foreign exchange, sorry, I won't even say that yet, interest rate swaps and equity total return swaps, credit default swaps, mortgage-backed securities, and other derivatives were traded in dark pools. Price distorting, price hiding, manipulating dark pools. So that companies and hedge funds and market makers and banks can trade between each other at a set price without affecting the real stock price. That's why 98% of Forex is traded on dark pools. That's why 88% of all other derivatives are traded on dark pools. 88%. Precious metals, 97% of all precious metals are traded on dark pools. Do you see, if you go to the COMEX, you can go to the COMEX and look up the amount of precious metals that these banks are buying and leasing to each other, and you will be shocked to see the amount of precious metals that these banks are loading up on at these low prices, because they're artificially suppressing suppressing the price of precious metals in order to buy more. So that after the stock market crash, after the meme stock squeeze, after the Fed printing our fucking money and inflation hyper-inflating the dollar, once the central bank digital currency comes out, likely pegged to precious metals such as silver, palladium, or gold, or maybe something else as well, then they can let the price rip because they're going to own shitloads of that precious metal. And people that are properly positioned, just like AMC and GameStop, or people that take their earnings off the VIX and the SPY puts and other meme stock puts and put that into the right place, right calls, the right shares, follow the squeeze, and then use those gains to follow the further squeezes that are happening in the other reverberations of meme stocks and precious metals and cryptos and other things that are going to squeeze, you could potentially be a billionaire. Many people could. That's my plan. That's my goal. I will be extremely fucking furious with myself if I don't have billions of dollars in the bank after paying taxes when this is over. I will be fucking livid if I don't make billions, multiple billions with a B as in bitch, which is what Ken Griffin is. You know what else starts with B? Bernie fucking Madoff, the creator of payment for order flow. Scumbag, criminal number one, Ken Griffin's teacher and confidant. Edward has been doing some serious fucking due diligence, and Javi tells us that Bitcoin has just hit $27,000. Holy fuck, we're going to be so goddamn rich. Wow.
Oh, man.
That is phenomenal.
So,
I apologize. I am excited.
Let me know if you're...
I wasn't excited for 30,000. Excuse me, Edward, one moment. I wasn't excited for 29,000, for 28,000, 27,000. I think our next stop is 17,000 on Bitcoin train. I'm fucking blown away.
Money.
Yeah, if not 7 to 12,000.
Fucking love this crew, man. We're going to be fucking rich. And you know it. If you guys want it, go check out the merch store. Thank you, Javi. Thank you for contributing. Check that. Holy shit. $27,998. That's fucking phenomenal. It's going to continue its downward descent, it looks like. 28,029 says Gummy right now. Of course, crazy fluctuations in the price.
Yeah, man. Not looking good.
Max Payne. Phenomenal. Andrew, thank you very much, brother. You're a legend. You're a bloody legend, brother.
Hey, boss, let me know.
Where's it at, Edward? Which one am I going to? What channel is it in?
I'm sure.
MMAT is on our radar, Liberty Prime. Thank you very much for your support. MMAT max cost to borrow 500% on Ortex. Thank you, brother. That is good looking out. Appreciate you sharing that with everybody. We've got a whole thread on MMAT versus MMTLP, and that one is coming too. Sorry, Edward, go ahead. I had to turn my volume up. I couldn't hear you.
You're going to have to on me.
Yep, no problem.
Discord. Live. Probably. You know.
All right, hang tight. I'm getting there. Phenomenal. I get to let Edward do the work. Thanks, brother.
No, I don't know where
Kick ass.
So there's actually two big documents
The United
There
States.
is
Go
one
back,
that's-
brother. Hold on. Slow down for me. The U.S. SEC Office of Investigations presents us August 31st, 2009, the public version investigation of failure of the SEC to uncover Bernie Madoff's Ponzi scheme.
And then there's a second one that came out 2 years later.
A report of investigation from the United States SEC Office of Inspector General, zoom in, Edward, September 16th, 2011.
This is Inspector General David Harold David,
Harold
now
David
works for
Kotz
BRG.
of Berkeley Research Group.
Kotz. So there's a few interesting things on him, but yeah, I don't. He seems to be okay, but not what resulted in how the case. This one is huge, so this one's like 400. Like this page is 400. But I put it in a separate spreadsheet so I can highlight together. Point out it's the same document. This one, let me. So 2008, the SEC learned that credible and specific allegations regarding Madoff financial wrongdoing were repeatedly brought to the attention of the SEC staff, but were never recommended to the commissions for action.
Hold on.
Yeah.
So, December 16th, 2008, former SEC Chairman Christopher Cox contacted the SEC Office of Inspector General asking them to undertake an investigation into allegations made to the SEC regarding the one and only criminal, Bernie Madoff, going back to at least 1999. And the reason that these allegations were found to be, quote unquote, not credible. Former Chairman Cox also asked that OIG investigate the SEC's internal policies that govern when allegations of fraudulent activity should be brought to the commission. In addition, he requested that the OIG investigation should include all staff, contact, and relationships with the Madoff family and firm, and any impact such relationships had on staff decisions. Their investigation of the SEC's failure to uncover Madoff's Ponzi scheme analyzed the SEC's response to all complaints it received regarding the activities of Madoff and traced the path of these complaints through the commission from inception, reviewing what investigative or examination work was conducted with respect to these allegations. They also investigated the allegations of conflicts of interest regarding relationships between SEC officials or staff and members of Madoff family. And what did they come out with, Edward? What did your due diligence find out for us, brother?
Oh, it gets bad.
Zoom in just a little bit, brother. A little bit more.
Yeah, there you go. So, former SEC Director Eric Swanson, who eventually married Madoff's niece, Shauna Madoff, may have played in the examination or other work conducted by the SEC.
So you're telling me that the SEC Assistant Director who married Shana Madoff was part of the examination and work conducted by the SEC?
Yeah, that's exactly what happened.
Interesting.
I don't know why nobody went over this case. It gets worse. You can see there's red flags that were overlooked by the SEC examiners investigators, which have been identified by other entities conducting due diligence. So he also served on the SEC advisory committee, participated on securities industry boards and panels. This is his responsibility, and had social and professional relationships with SEC officials. What is this?
You're
I
fine.
think this is referring to Madoff. The status. That's.
Keep going. You're good, dude. The SEC conducted an analysis of whether there were red flags that were overlooked, which may have been identified by other entities conducting due diligence. What, like retail right fucking here, like Edward, you know, that could have led to a more comprehensive examination or investigation.
This talks about how investors were actually sending reports to the SEC regards the red flag.
Fucking insane, dude.
One of the ROI included, all of this, specifically analysis of the allegation to the former OCIE Assistant Director Eric Swanson's relationship with the with the, of course, with it gets deeper. It gets deeper.
Diaz,
So
thank you,
the
brother.
OIG,
OIG
no,
requested
you're good.
the SEC's
Office of Inspector General. So OIG is Office of Inspector General.
Yeah.
Hold on. Requested SC Office of Information Technology to provide all email, former of all the, obviously all the above, and I mean, this stuff just goes so much deeper. I mean, want to.
Let's take a look here. Northeast Regional Office staff members who were involved in the investigation of Madoff's firm that was initiated in 2006 for the period of January 2006 through 2008 requested that OIT provided these emails on an expedited basis. The following day, December 18th of 08, the OIG requested that OIT perform a search of all emails for the SEC headquarters and the New York Regional Office and Boston Regional Office staff members from January of 1999 through December of 2008, or from the earliest available date. Keep going. What did they come up with?
Let me get.
No problem, dude. Take your time. I'm thrilled. This is exactly the same kind of bullshit that we're seeing now with all of these other market makers and crooks.
Okay, here we go. Here's.
Well, I generalize.
So here is the power they have.
They also requested and obtained from the National Securities Clearing Corporation, the NSCC, all clearing data records for all executions affected by BMIS. Whether BMIS
That's
was
Bernie Madoff's firm.
Bernie Madoff's
BMIS.
firm, BMIS. So they were looking for all the clearing data records for the executions that were affected by Bernie Madoff's firm, and whether Bernie Madoff's firm was on the purchasing side or on the selling side of securities in 14 specific equity securities on a daily basis in Excel format. Go down a little bit. What did they come up with, man? Holy shit.
This is what I'm saying. When they say that they can't do certain things, this is in 2005.
They can do whatever the fuck they want if they really want to.
They were able to obtain, yeah, exactly. They were able to obtain all clearing data of all executions from any date from the NSCC on a spreadsheet, whatever that even means back in that day, but of the specific securities. How hard would it be for them to request it for AMC and GME for both selling and bidding side from Virtu and or Melvin Capital or any of the other firm?
The investigation.
This is the power they have.
The investigation always comes after the market crash and the market collapse. We know the Department of Justice is investigating these guys, right? We've seen Archegos and other banks now getting raided. We've seen multiple banks in the last few weeks get raided. And after a market crash, go ahead.
They even obtained from the depository trust.
Yep.
Position record.
During the course of the OIG investigation, they also obtained the records from the DTC position reports. Could this be why so many TD Ameritrade buildings and other financial record buildings, like the one in Bartlett, Illinois, that you saw me visit while it was still on fire, are being burned the fuck down?
They probably knew they were getting raided that day, and then pre-planned for it.
It's sickening. It's absolutely
Allegedly.
sickening. So how can they provide the trades? Sure, in '99, but if like the computers, the digital formats are destroyed
Excel
and it's only
format.
kept on paper format, or if those digital
Excel
copies,
format.
yeah. But if those digital copies are kept in that facility, now they're all gone, and they could say that it was an act of God.
I mean, yeah, we will never know until we'll know.
Absolutely not.
Because this case was not disclosed until years later. This is what, 2011, 2009? This is 2005. 4 years later, they disclosed what they knew. That's how bad it is.
That's how long it takes for them to get around to it, right?
Well, they don't want to, make a scene publicly, right? So they disclose it later on.
Make a scene. Senseonics running 1,300% makes a scene, right? AMC and GameStop makes a scene.
Here is the big. Because there's so much, so much to go over. Oh, I'm here. There we go.
While the SEC ensured that all of Madoff Associates' customers received their money back, they took no steps to investigate Madoff. So because a rich man stole from other rich people, he made sure that they got their money back, but there was no steps taken to investigate Madoff. The SEC, oh, gee, I wonder if maybe there was some, I don't even want to say anything.
Yeah, I
think
wonder
people
if
can make
Aaron
their own thoughts on
Swanson
that.
married, yeah.
Eric Swanson married fucking Madoff's daughter. Wow, no conflict of interest at all. The SEC focused its investigation too narrowly. Meanwhile, Eric Swanson was off banging, Sherry Madoff or whatever the fuck her name is, and seemed to not have considered the possibility that Madoff could have taken the money that was used to pay back his associates' customers from other clients for which Madoff may have had held discretionary brokerage accounts. In the examination of Madoff, the SEC did not seek DTC records, but sought copies of such records from Madoff himself. What does that mean? They allowed Madoff to report his own records, just like Archegos,
Self-reporting.
just like the market makers and hedge funds and banks and prime brokers are currently doing against AMC and GameStop and all of these other fucking meme stocks that ran hundreds and thousands of percent. Lots of them.
Oh my goodness, I missed this.
They conducted two investigations in 04 and 05 based upon the hedge fund manager, Bernie Madoff's, a complaint by a hedge fund manager against Bernie Madoff and the series of internal emails that the SEC discovered. The examinations were remarkably similar. There were initial significant delays in the commencement of the examinations, notwithstanding the urgency of the complaints. The teams assembled were inexperienced, and there was insufficient planning for the examinations. The scopes were in both cases too narrowly focused on the possibility of front-running, with no significant attempts made to analyze the numerous red flags about Madoff's trading and returns. Red flag, huh?
Absolutely. It gets worse. Okay, so an enforcement staff attorney several attempts to documentation European counterpart. Other in a third, the letter was drafted.
Wait a minute, could you repeat that? I didn't hear you on that one. Repeat that for me.
Oh, so an enforcement staff attorney made several attempts to obtain documentation from a European counterparty, another independent third party. Although a letter was drafted, the enforcement staff decided not to send it. Had any of these efforts had been fully executed, they would have led to Madoff's Ponzi scheme being uncovered. So because the enforcement staff decided not to send it, the SEC didn't send it. The paper, the email, all the documentation.
Wow. The criminality. I would like to thank Bernie Madoff. I would like to thank Kenneth Cordell Bedpost Griffin, and JP Morgan the Devil for providing us with this wonderful opportunity because of their greed, because of their complete selfishness and lack of empathy for others. It has provided many investors the opportunity to hedge themselves for a market crash and a stock squeeze, a short squeeze of the century. There's a reason that people are calling it the MOASS, the mother of all short squeezes, kind of a knockoff of the Moab, the mother of all bombs. Get it? But one thing that many people in AMC and GameStop fail to realize is that there's 100 meme stocks. And while AMC and GameStop, I do believe, will be probably the largest of the squeezes, that doesn't mean that there's not going to be 100 other stocks squeezing because of systemic risks to financial systems by hedge funds, banks, insurance companies, to the tune of 80% of nominal GDP. That's just aggregate liabilities vulnerable to runs. That doesn't include trillions and trillions and quadrillions of dollars of derivatives, truly. That's just what's vulnerable to the runs. $18.2 trillion. And we know that the Federal Reserve has how many trillions of dollars on their balance sheet, guys? How many trillions of dollars in assets?
So this is
8.9 trillion.
another one. Read over this part.
Go ahead,
read over
brother.
that part. Sorry.
No, you're fine. Go ahead.
In addition, read over this part. This is what he traded.
An enforcement staff attorney made several attempts to obtain documentation from European counterparties, and although a letter was drafted, the enforcement staff decided not to send it. Holy fuck, dude, you're not kidding.
Yeah.
Had any of these efforts been fully executed, they would have led to Madoff's Ponzi scheme being uncovered. It's really that simple. They can pretend to be eyes wide shut anytime they want. And then after the fact, the Lehman Brothers investigation, the Bernie Madoff investigation end up coming out, and maybe one guy goes to jail for a year or two, and everybody else gets off scot-free. Meanwhile, Americans lost trillions and trillions of dollars. With respect to his purported trading strategy, many simply did not believe that it was possible for Bernie Madoff to achieve his returns using a strategy described by some indicators as common and...
Oh, did your mic go on? I think your mic went.
Yep.
Oh no. His mic
Damn.
went off. Darn it.
Hedgies are big tonight.
I've been trying to short. Yeah, so with respect to his perpetrated trading strategy, many simply...
We're going to restart real quick here, guys. I'm just going to not restart the stream. I'm just going to restart the Discord viewing so that I can jump back into the voice chat with the guys. We're talking financial runs. I may or may not kiss this old bat when we're fucking billionaires.
We're watching trades that
Yeah.
Bernie was doing, and they're like, how is this even possible? He's making this much. Just kind of like when Ken Griffin's announced, like, he's made billions, right, off of whatever. How is this possible? It's kind of like we retail investors are like, we're doing DD, and like, these guys are going down. How are they, like, why would he look for in Sequoia, like, get some investments from other people? Like, it makes no sense. So, like, it's the same thing that people were calling out on the sus factor of trading going on. And the same thing we're calling out the market maker and banks and all the players that are involved in sus trading, short sellers, every single firm involved. So it led to, in addition, this is why it's so bad. In addition, there was a great deal of suspicion about Bernie Madoff's purported options trading. So options, here we go again with the options. With several entities not believing that Madoff could be trading options in such high volumes where there were no evidence that any counterparties had been trading options with Madoff. Private entities' conclusions were drawn from the same red flags in the Madoff's operation. The SEC considered in its investigations, but ultimately dismissed it. Again, it dismissed the Madoff with tons of red flag.
They make it so easy. They make it so easy, dude. They choose not to look in order to say that they had no idea it was happening.
It was not. This is so bad. This is suspicious investors, counterparties, firms, private entities that even sent examinations and requests to the SEC to obviously investigate this thing, because they're like, there is no way. We have proof. We have, we've been doing this for a long time. We can tell when this is obviously really bad. But instead, guess who they went after? They went after several documents with Avelino Buenas. I don't know what that is. I guess it's a firm or something.
Yeah.
Overall, that's who they went after instead of Madoff. In this document about this, they were sidestepping Madoff and they went after them. Madoff had complete control over customer funds and investment.
You could do whatever the fuck you wanted.
This is Ken Griffin locking investors out. Isn't that the same? He locked his investors out. Can't take your money out. Boom.
And now they're going to lock investors in, like they've already locked investors into Citadel. If they, if they take their money out, they can't rejoin. They can't go back to Citadel under certain pretenses. And now they're locking people into their TSP accounts. Meanwhile, markets are crashing. Housing debt and non-housing debt is, skyrocketing. Auto loans, credit card debts. Look at student loans, just absolutely fucking skyrocketing. And then you've got companies like Chinese developers missing bond coupon payments in the tunes of hundreds of billions of dollars every single month. And a default could trigger the cross-default provisions on all of the developers' $7.7 billion worth of bonds in international capital markets. Sunak has missed $4 coupon payments totaling $104 million since April, with 3 of them still in grace periods. So this looks an awful lot like Top Country Garden, Kaiser Group, China Evergrande, is Yonglang Holdings. It's the debt crisis spilled over into the country's vast property market, with new home sales and construction slumping as financing gets tougher and potential home buyers shy away. This cannot be a coincidence that they're locking people's money in to these markets at these times and moments. They need the liquidity and the money from all of these federal employees in the TSBs to stay there. Even if it's in the G fund, they still need it to stay there in the G fund, because that provides them with liquidity, with margin, with cash assets. The new regulations force the top 36 banks to maintain $1 trillion in cash assets on hand every single fucking day, and the rest a proportional percentage.
Yeah, right when they need a bag holder.
Right when they need a bag holder, all of these federal employees and other employees are just going to be expected to not be able to sell if they're making money or sell if they're losing money. That sounds like manipulation, if you ask me. And that being said,
Go ahead.
I want to state this, that I'd like to thank Bernie Madoff, I'd like to thank Janet Yellen and Gary Gensler and all of these banks and brokers and hedge funds for being so greedy and giving us the opportunity to make billions, if not trillions and trillions of dollars. I would truly like to thank them for this. I feel sorry for anyone who's going to lose money, and billions and billions of people are going to lose money, even more so than already have. But that doesn't change the fact that I'm going to do what's best for me and my family, and my friends and the rest of the cash cartel are going to do what's best for them and their families. So I urge everybody in the think tank and everybody out there watching on YouTube and Rumble or Spotify, please think about your investments. Think about the possibility of a market crash. Think about the possibility of a short squeeze, because it's not the first time, but it'll probably be the last time it's ever going to happen to this extent again. And people have the opportunity to get filthy fucking rich. AMC's new range, in my best guess, is about $10 to $12 now. Cash, why don't they want it going under $10 again, man? What happened when it fell down to $9.92 today? $9.92 on 5/11/2022.
Haircut.
Come again?
Haircut.
Haircut. Haircuts happened. That's why the stock price got immediately shot back up. I don't believe for a second that retail orders for $10 purchases caused AMC to bounce off a $10 support level. Not for a fucking second. The reason that the stock has stopped there for the time being is because it's the perfect place for the stock to be during a market crash situation. Because meanwhile, barring any outside interference, it leaves them in a good position to maintain good quality margin requirements using other assets and other blue chip stocks against that AMC stock worth around $10 to $12 a share. I would also guess that when the market really does crash, as in a proper 1929 meets 2008 crash that myself and Dr. Michael Burry, Dr. Marco Metzler, and many other millions of people are out there then AMC and GameStop and BBIG, BBY, you know, a lot of these other meme stocks will likely drop in value further. Maybe, I don't know, AMC might go to $7-8. GameStop might go down to 30, 40, 50 bucks. And that would present, for a very brief period of time, I would suppose, a buying opportunity of epic proportions. Because afterwards, I'm assuming that would lead to a further set of margin calls and defaults and a sudden increase in price, which is what's likely to be expected when margin calls happen, when executive orders happen, when BBIG releases their dividend May 27th, when June 2nd, when GameStop votes on their dividend. Any moment now, any day now here, when MMAT releases their dividend, or, you know, issues their dividend for MMAT and MMTLP. There's a plethora of market issues which hedge fucks cannot avoid, which shorts must close their position. If they can cover, they'll cover. If they must close, they must close. If they're liquidated, if they're bankrupt, then their prime broker or their lender has to cover the cost. And then if they're bankrupt, then the DTC has to cover the cost. And then if they're bankrupt, which is probably what's going to happen, the Federal Reserve is going to step in and bail out every fucking one down the line, or at least the prime broker or the DTC, in order to pay the prime brokers, in order to pay the people underneath them to get those short positions cleared up, closed out. The inflation caused by that artificial printing of money will probably be, no, it will absolutely, in my opinion, be the most ridiculous hyperinflation that you have ever seen. So we as investors, or I'm sure say anybody, me as an investor and people in the cash cartel and the BossBlunts think tank, need to move quickly. And you need to look into tangible assets for yourself. Tangible assets. Physical precious metals. Could it be real estate? Could even be food. A lot of things are tangible. It could be marijuana. It could be tobacco. Imagine how much some prime quality whiskey is going to go for when nobody can get their hands on any. Thorbladed says, I think this isn't the crash. I think we see the next leg up and then they fake bull rally for them. Yeah, well, I appreciate your support, brother. I just don't. The dates don't make sense. The time frames don't make sense. And I believe in dates. I don't give a fuck what other people say or do with their money. It's none of my business. But I believe in them because if I want to make money, I have to buy and sell at the right time. And that means time is a relative thing. I have to know the date. I have to know the exact moment in time in which I expect that this may happen. And therefore, I will keep my eyes open on everything through this June 3rd, 2022 executive order and be in expectation that it's looking like stable coins and stock markets, crypto, and are really going to, and as well as bond, are going to take massive losses, which will most likely lead to the most epic short squeeze in history. That being said, I think we're going to be filthy fucking rich. Ken Griffin, I want my fucking money. Pay me. Pay me, motherfucker. On that note,
so goddamn rich.
We're going to be so goddamn rich. I'd like to thank Felipe, Joey, Thorbladed, Moises, and Diaz. Pete, thank you so much for your support. Ferrari Boy, thank you as well. Bitcoin after the squeeze, man, I don't have the slightest clue. I do know that for now, Bitcoin's looking really fucking bad. And it's not something tangible. It's not something you can hold in your hand. And you don't know what kind of regulations the United States government is going to put against cryptocurrencies. But again, I'm not a financial advisor, but I do wish you all peace and wealth. Let's get fucking rich. On that note, I'll leave you all with a song. Have a great evening, everybody. Thanks for tuning in. Thank you to everybody in the think tank. Many thanks to Cash Money. Thank you to Edward and AMC Bigums for joining me. Thank you for sharing all this due diligence on the absolute corruption and lack of investigation between the Bernie Madoff crimes and the SEC incompetence, which we have proven time and time again has led us to one after another market crash. And we're seeing 2008 intensified, multiplied, and sped up. On that note, have a great night. We're going to be so fucking rich. Money printer goes burr. We're going to be so goddamn rich. What's that money printer say, Cash Money? Jerome Powell, get the goddamn money printer out. Fuck yeah, we're going to be rich as
Cue that beautiful music, dude.
Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich.
New Exchange coming soon.
Great. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't you?
Yellen, give me the fucking money. Get the goddamn money.
I only get to show 5%. I still have a lot to show. Until next time. This case is huge.
Great. Bounty letter.
We're gonna be so fucking rich. Get the goddamn money printer out.